Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. I'll introduce Rob here in just a few moments, but as always, we need to cover off some important housekeeping details about the session. First and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so for this session, we have one method of asking questions, and that's going to be through the Q&A window. We are live streaming to multiple different platforms right now, in addition to our Zoom audience, YouTube, Facebook, Twitch, Twitter. And so Rob will go through his general market analysis. I'll go through some case study considerations, and then with the remaining time, we'll funnel in questions from all of those live platforms that I just mentioned. So the Q&A portion is a bit limited. If we don't get to your question, just know it has nothing to do with the validity. We just only have so much time. With that, if we don't get to your question, definitely take that as encouragement to attend the insiders meeting when there's a 45-minute portion of Q&A solely based on answering questions for our paid subscribers. So obviously a much higher likelihood of getting your question addressed there. Lastly, any support-related queries I can handle in the chat window. And of course, for any interaction amongst other attendees, please feel encouraged to use the chat window. Just make note that by default, it goes to hosts and panelists. So if you would like everyone on the webinar to see your message, be sure to change the "to" at the bottom to everyone. All right, so that covers off all the important housekeeping details as per usual. The market reacted negatively today to the JOLTS report, and waiting on the Fed tomorrow. So going to be interested to hear Rob's thoughts as always, and looking forward to interacting with you all that are joining us for the live session. So it's great to see you all. Thanks for joining us. And at this moment in time, I'll introduce who we're all here for. The man of the hour, that's Rob Roy.
Hi, everybody. Thanks, Zach, and welcome for all of you joining us on all the different live streaming platforms that Zach just went through. So trying to catch up on this modern day issue of live streaming platforms, not my forte, if you will. But there you go. So don't know why you want to look at me. You see me enough in all the videos, but there I am. The way TradeFinder works is that we will talk about the markets, not just the U.S. market, but a lot of international markets as well. We'll go through all that. Lots to talk about regarding the Fed, et cetera. Big earnings week, and then we'll see how that plays out. So I think there's going to be a lot of volatility throughout the rest of the week. We'll talk about any of our case study trade alerts that we've sent out to our subscribers, give you an idea how that works. Then we'll look for any trade ideas for this week, case study considerations, we call them. We'll review. We only have one that we consider. That was from last week. We'll take a look at that. Some interesting things occurred today with earnings. And then at the end, we'll open it up to Q&A. So with that, let's go ahead and get started. Give us as much time as possible for the Q&A at the end. So here's the market. And when we take a look at that, we want to add in volume, and as expected, below average volume today. It's a two-day Fed meeting. They started meeting today, but tomorrow's the big day because that's when the announcement comes out. Now, this is where it gets really interesting because the market is looking for any signs that the Fed is going to pivot. But the pivot definition has changed. Originally, when they were talking about the pivot, that was when the Fed was going to go from raising rates to cutting rates. And I've been talking numerous times that I feel that we are going to go from a meeting where they raise rates to cutting rates at the next meeting. I don't think there's going to be a sideways in between or a non-action out of the Fed in between. I think at some point they'll realize they've gone too far and then they'll immediately cut rates. That was the original definition of the pivot. And then it went to, well, the pivot is going to be when they decide to stop raising rates. And then the pivot definition changed to now they're saying they're going to go away from raising 75 basis points a meeting, which is already factored in for tomorrow. So anything other than a 75 basis point rate hike tomorrow would be a surprise to the market, either to the good side or the downside. Don't see them going above 75, so I don't think that's a concern. But the market is going to be looking for the Fed's commentary. So there may be a reaction right when the Fed makes their announcement, but the big announcement or the big move in the markets, I think, will come in the commentary afterwards, the Q&A with Chairman Powell when they start asking, and they're going to, on where do they see rates going forward, because right now it looks like 75 this meeting, then 50, then 25. That's what the market's looking for. But if they act like, we are going to stay, in other words, they give really hawkish tone that we're going to stay in raising rates mode until we see the data change. And as Zach mentioned earlier, the JOLTS report, which is job openings, was stronger than expected. The futures were actually up. We talked about this in the short. Yesterday was the first trading day of the month. Usually the market at least starts to the upside. Then we'll see if it can hold it. The market did start to the upside, but then the JOLTS report came out and there's 1.9 jobs available for every one person looking. So that's a tight labor market, means wage inflation, et cetera, and the market just sold off. And so after it sold off from that report, it went dead flat the rest of the day. Absolutely nothing happened from about 11 o'clock on until the close. So the market is waiting for whatever's going to come from the Fed tomorrow. Again, the bulls are hoping that there's going to be some signs of a pivot, and I really think there needs to be more. We've had this kind of wave 4 bounce here. I think that's anticipation of the Fed slowing rates. If they were to surprise the market and say, hey, we're going to raise 75 this meeting and wait, you would see the market take off to the upside. I don't think the Fed's going to say that. I don't think they're thinking that. And so I would think the volatility is going to come, some of it on the announcement, but more when they get into the Q&A and try to read into Chairman Powell's mind as far as what the Fed is thinking moving forward. So a below average volume day, not unexpected. So there was the higher open and we closed on the low. And you can see we have a big outside day where the high of the day was above. Yes. So back to back, we have an inside day yesterday, an outside day today. That tells you, that's like dojis. For those of you that are candlestick charting fans. In other words, a lot of indecision. The market has no idea which way things are going to go. We're awfully close now. We did move the wave 4 on the high today on the open, but we're still awfully close to that 61.8% fib level. It would take a lot, I think, some sort of a bullish surprise from the Fed in order to break above that, but we'll see what happens. Again, the jobs report, the JOLTS report isn't doing anything because that's one of the Fed's main concerns, is trying to loosen this employment grip because wage inflation is real, and that's causing a problem as far as the overall inflationary picture. So tomorrow's going to be a big day, and we also have a lot of earnings this week. This is the biggest week all in all for earnings. You've seen some go to the upside, you've seen some go to the downside, and some companies have beat earnings and gone up, some have beat and gone down. It's really hard to imagine how the market is reacting to these earnings reports because there's no rhyme or reason to it. Like I said, some going up, some going down. I think next quarter is going to be tough unless there's some major revisions. I mean, just haven't seen that. All of these earnings reports, the one that really did talk about looking forward was Amazon. They were the ones that said, hey, yeah, we think that things are going to be tough in the next quarter. And I'll just go ahead and switch over to a chart of Amazon real quick. Perhaps that comes up in the Q&A later, but you can see that, the market didn't like that too much, but I feel like they were honest. And some of these other companies are, oh yeah, things aren't that bad. And we haven't seen that big of a drop off, et cetera. Well, we'll see what they're saying next quarter, because I think that's when we're really going to see, we'll be into the meat then of all these Fed rate hikes, et cetera. And I think you're going to see some things move to the downside. The last GDP report was positive, but what was negative was consumer spending was decelerating. That's not good going into the holidays, and that's what Amazon was talking about. So I feel like they were honest with their outlook, and they've been hit pretty hard for it, but perhaps they're one of the early ones to rebound because we're getting this out of the way, where some other companies, I think, are pushing that off until next quarter. And, you can kind of understand why. a lot of principles, based on company's performance, stock options, etc. Their pay is commensurate with performance, some stock related. And so if they push it off to next quarter, perhaps they get more bonuses or have an opportunity to sell some of their stock options, et cetera, at a higher price moving into the end of the year, whatever their tax planning is, et cetera. So there's so many little different nuances to take into account when it comes to that. But I do respect the fact that Amazon has been pretty honest. And so here we are at the wave 5. I'll just go ahead and talk about this chart and then we'll get back to the markets. But you can see we're right in the middle of this wave 5 target. We're at a 78% extension. That's a fib level, 78.6. So perhaps that's the end of the selling for Amazon. We'll see. If it breaks below that, then it could go to the 100% extension. But you're at a fib level. You've had an ugly day. We're oversold short term. You're at the wave 5 target. I think if you're looking down the road, then perhaps Amazon might be something for you to take a look at. I'll come back and give some more ideas on longer term views of stocks in a moment. But taking a look at where we are right now, we're still above the 10 and 50-day moving averages, again on the below average volume. But I just don't think you really count the past 2 days. I think it's just been markets sitting there, not a whole lot of action going on. They're waiting to see what happens tomorrow. And even though, again, the 75 basis points is factored in, it's going to be the commentary that's going to be the big thing. So we take a look at rates. Everything's kind of on pause right now. So that should be the theme of this. Market's on pause waiting for the Fed. That's basically where we are. We take a look at interest rates. Little bit of a bounce up off of the lower open this morning, but again, just sitting there waiting to see what happens. And notice how many days we've traded right through the 10-day moving average. 1, 2, 3, 4, 5, 6 days in a row traded through the 10-day moving average. So again, interest rates sitting there waiting to see what's going to happen. We look at the dollar, big old doji there on the dollar. We did label a wave 4 here on the dollar, but it's only 21%. So call that the 23% fib level. Elliott in his writings didn't really consider that a significant correction, even though it is in the algorithm and it does label it. It in his mind, 38.2 is when you had a correction that you could really put some belief into. But we'll see. Maybe we bounce to the downside and we come lower and we take out that wave 4. But in Elliott's mind, this wave 4, again, is not a real correction. It's just more of a pullback within the wave 3. So that could change, but a bounce back to the upside wouldn't be surprising either. And we put the moving averages on here. You can see we came down and hit the 50-day moving average on the low the past couple of trading days. We're back above that 10-day moving average. Call it dead on the 10-day moving average with a doji. I think you can expect some movement out of the dollar tomorrow as well. The VIX is coming down. It's kind of climbing its way down here with this move to the upside in the market. That's how it usually works, right? When you have a move, especially a 45-degree angle move, if we'd had a more vertical move, then perhaps the VIX wouldn't have come down as much. But when you're moving in a 45-degree angle to the upside, normally volatility comes down. And that's what happened. We're basing here over the past few days. So even the VIX is showing you that the market is waiting to see if there's a surprise at all that comes from the Federal Reserve tomorrow. So not much else to say. It's just tomorrow's a big day. That's what it really boils down to. Looking at the other markets, now we talked about this in the weekend update, how the DIA has relabeled. It's no longer in a 5-wave to the downside pattern. It's gone. So we're in corrective mode here. And that's where you have the ABCs and the 1, 2, 3s. I just take them off the charts because I use these zigzag tools, etc. for that. But that's what you would normally see is a bunch of ABCs and 1, 2, 3s going on right here. But right now, pretty good move back on the Dow is resting here, which you would expect. You look at the moving average and you can see how overbought the Dow had gotten. So perhaps a little bit, even if it's just an intraday move, because I've talked about this before and it was brought up last month, I believe, was when the Federal Reserve comes out, when the announcement's made, the market makes a big reaction, and then it almost always retraces that first move. So whatever happens initially almost always gets retraced. So even if we start higher, we come down, or if we start lower and go back up, perhaps tomorrow we come down and test that 320 level, but we're going to have to wait and see what's going on here. We could move into a massive triangle here on the DIA. That's possible, where you can see the potential forming here of a triangle. This could be an impulse move to the upside, and perhaps we get a B wave and the market move back higher into the end of the year. It doesn't seem logical, but it's a possibility. That's exactly what could happen. Remember, you don't trade on what you think the market's going to do. You have to listen to the market. That's how you become successful as a trader, because you can gain all the education you can. I remember the first thing, the worst thing that happened to me was when I learned more about the intricacies of the market, because then you start to think that, okay, well, based on this information, this is what the market should do. And you end up making trading decisions based on what you think it should do. And that never works. Nobody is smarter than the market. The market's always right. So listen to what the market is telling you, even if it doesn't make sense. There were some comments on the last video. For those of you that are watching on YouTube, if you haven't visited our channel, please do so, Elliott Wave Options on YouTube. And some people were talking about that as far as the market's movement. I'm trusting the market, but it doesn't make any sense to me. Well, as long as you are trading based on what the market is telling you, that's the way to do it. And there's going to be numerous times throughout your trading career when the market moves the exact opposite way of where you think it should be going, even if you have good economic knowledge, fundamentals of the market, etc. The market's going to do what the market's going to do. That's the main tip that I could give anybody, is never think that you know what the market's going to do, or you feel like you know what the market's going to do. It's going to do what it's going to do. To me, the best indicator of what's likely to happen is Elliott wave. Of all the ones I've traded, and people come back and say, well, how did it know the Fed was going to do this? Well, I don't know, but the algorithm is the most accurate individual technical indicator that I've seen, and I've been doing this for over 25 years. So that's what I want to share with people. That's why we're Elliott Wave Options. That's why we talk about Elliott Wave so often. Is it perfect? No. Is it always right? No. But to me, it's the most accurate thing that exists out there. So pay attention to it. So when we look at the diamonds, is that a big triangle forming, or is this a wave impulse and we're going to have a B wave pullback and a rally into the end of the? Either of those are possible scenarios. You just don't know at this point in time. And then taking a look at the Qs, I think it's important to look at the Qs. We've talked about how they're going to underperform, and they have. Now they're still in a 5-wave to the downside pattern. That wave 4 only bounced 45%. Remember, on the S&P, we bounced all the way up almost exactly to the 61.8% level. We're just a hair below it now, but that hasn't happened on the Qs. The Qs only bounced 45%. They have not overtaken the 50-day moving average. They've hit it on the high on several days in a row, but where the S&P has been above the 50-day, the Qs have been below it. So still underperforming. Once the Fed decides to start cutting rates, that's when you can see the triple Qs begin to outperform. So just to be really clear, historically, the way it works is when you're raising rates and you're in an inflationary environment, it's very tough on tech stocks. And so the Qs are going to underperform. Once the Fed does what I consider the pivot, all this other ridiculous stuff that's being talked about, oh, the pivot is if they don't raise 75 basis points. That's hopium, that people are hoping that the market rallies off of that. Maybe it does, but the real pivot, in my opinion, is when they stop raising rates and they cut rates, because that's when you start to look to the Qs. That's when they're going to outperform. And because they've underperformed, they will greatly outperform, again, in my opinion. And so that's where you want to be, but not until the Fed gets to the point where they cut rates, which is probably not until next year. But we'll see. We'll see how that plays out. The IWM, still trying to see, can it get above the 190? We know we're back above 170. Well, we're running up there. Can we break through that? If the market does react, if the Fed does give some sort of a positive surprise, if they're less hawkish than they've been, I think the Fed is pretty frustrated, though, especially with wage inflation. I think that's a real concern on their side, and they want to bring this tight labor market under control. And until they do that, I think they raise rates, and they are not afraid to continue to hurt the market. So the market is giving us this bounce. We were oversold in anticipation of some sort of a change. And if they still talk extremely hawkish, then the market's just going to give up the ghost and move to the downside, I think. But the IWM is at a 70% wave 4. If we get up to 190 and break above 190, this is a place to be bullish as well, because look what's going to happen here. If the IWM can get above 190, that's going to break 78.6. That means it'll violate and be disqualified this 5 wave to the downside pattern. So if the IWM can get above 190, you take the Elliott wave pattern off and you wait to see it relabel and figure out what's going on. But in the meantime, you break above 190, you've disqualified the downside pattern, and you break above 190 and you're bullish again, and you've got to move likely at least up to 200, if not higher. So there's a bullish trade for you if you want to watch for that. If the IWM breaks above 190, you're likely, in probably a short period of time, going to 200. That's a pattern that I think is really, really interesting. Now it could reverse and head back down. It's a tiny bit overbought still, a little more overbought than any of the other markets that we've looked at. It's going to take, I think, again, a bullish surprise out of the Fed tomorrow for that to continue. But if it does, that's a place to be. So there's a couple things. The longer term, look for the cues when the Fed cuts rate. Make notes of that. That's going to be a great trade for you. And with the IWM, if it can get above 190, if the Fed gives us a pleasant surprise, you got to trade from 190 to 200. Really easy trade to the upside. So there's a shorter term one. There's a longer term one. Feel really confident about both of those. Looking at Bitcoin, well, we've gotten above 20,000, but we're just kind of, all right, now we got above 20,000. Let's consolidate here for a while. So we consolidated between 18 and 20,000 for so long. Now we got above 20,000, and we're just changing where the consolidation has been. But if you're bullish, you can take some positive vibes out of that, right? You're sitting above 20,000. The longer you sit here and consolidate, the better chance there is that we do make a move to the upside here. And you know where we're going. If we start to break away from 20,000, you're going to 24,000. And so that's what's going to happen if the Bitcoin can stay above 20,000. And the longer it stays here, the more we get into the live in Florida. And boy, we had a huge launch today. We had the Falcon Heavy rocket from SpaceX, which is a big rocket. It's like 3 of the Falcon rockets all put together. That's the best way of describing it. So they have 2 pieces here and they have 1 here, and it is loud, and it rattled the house when the sonic boom occurred, rumbled everything when it took off. It is something else. There hadn't been a Falcon Heavy launch in over 3 years. So that's really cool. The reason I went off on the tangent there is some of our longer term viewers are aware of what we call the launchpad effect. So we've gone sideways here, haven't really broken higher yet, but perhaps that occurs from here and going sideways again above 20,000. Maybe that's the key that gives us the break above and we run up to 24,000. We'll see how that plays out. So look at some of the international markets. Be interested to see how they're all reacting. Are they pausing and waiting? Well, look at this on the EWA. We needed to get above 21, and boy, it tried. You can see where it opened and closed dead on it. So that's a step in the right direction. You know, that's not the kind of break that you want. So normally we'd be talking about how we want a follow through day. Okay, we got above 21. Now let's see if we can get a follow through day. But when you open well above it and you close on the low, you can see why, because on the open, it was well above the 10-day moving average. So we were overbought. You heard me talking about this all the time. When you break above a resistance level, if you're doing it in an overbought condition, it won't hold. It just doesn't. That's a trading rule. And so it didn't, and it came back down, but at least it held 21, but it didn't go above it. So now we see what happens tomorrow out of the EWA. The best thing there would be take a page out of Bitcoin's book, go sideways on top of 21, then maybe you get a run, because if you do, you've got a nice move ahead. You're going to go up to 23. If we can hold above 21. Now, all that could change tomorrow, right? We could be right back down here to the 10-day moving average, back under 21. So we'll see what happens out of the EWA based on what the Fed does tomorrow. And then we look at Canada. And now Canada, this is kind of what you want to see out of the EWA. It got above 33. It was a little bit overbought, but it's held it there and it's gone sideways. That's exactly what I was just talking about being above 21 on the EWA. You continue to do that on the EWC, you hold it here, and then you break, and then you can move up here, and you could have a really nice run out of Canada. So are we going to get this bullish move at the end of the year? The possibilities are there. It would be surprising, but again, I got to trade on what seems surprising or what doesn't seem surprising or what seems out of the realm of the possibility. You just trade by what the market does. And so what we do, whether it's TradeFinder for our alert subscribers, our alerts, is we listen to what the market's telling us and we trade according to the charts and what our technicals are saying, regardless of what we think may happen. And the technicals are saying this is good. So far, you're sitting above 33. It tried to break up. It couldn't do it. So some of the markets just really didn't have the momentum based on being slightly overbought. Same thing with EWC there. A little bit overbought on the high, but I think this is just a pause. I think globally the markets are kind of taking a little bit of a pause and waiting to see what's the Federal Reserve going to do tomorrow. Are they still going to be so iron-fisted on this rate hike thing? And then India is, India was the best looking market for a while and it's looking good again. So this wave 4 came down. You have to take that off. Because it disqualified the 5-wave pattern, but yet we're still in an impulse move here. So when you have an impulse move like this, the cautionary thing is that you don't know when that correction is going to occur. Is that an A wave? These aren't labeling 1, 2, so it does not look. None of these markets look like they're a 5-wave pattern to the upside yet. That could change, but so far they don't. They look more like zigzags, like these are A wave impulses, and then we look for a B correction and see what happens there. And if we hold at one of the fib levels and start with a wave C higher, then we know we have a zigzag to the upside and we know where we can trade. That's when the market becomes far clearer. Love to trade the zigzag patterns because they're only 3 segments if you want to stay true to the Elliott wave lingo, or 3 waves, whatever you want to call it. But we'll see if we get B waves and then we turn and move back to the upside. Well, then we'll have all kinds of trades that are really clear and not waiting to see what's going to happen, whatever. We'll know exactly what's going to happen moving into the end of the year. I thought we would go ahead and take a look, since we don't have a whole lot of case study considerations to view. We'd add in a couple extra international markets. So we'll look at the EWU. This one's surprising me as well because of the negativity that was occurring over there with the changing the prime minister and taking away intervention, etc. All the things that were going on that were so negative, it's bounced back nicely over in the UK and holding. So this is an example of what you would like to see out of the EWA and the EWC. See how it got above 28, which was resistance. It got above there, let the 10-day moving average catch up, and now we try to put some distance there. So this is a breakaway day. Can it get a follow-through day tomorrow out of the EWU? Now, how would you, with all that negative publicity that's been going on and everything, how could you say that or come up with a scenario where the EWU would be the first one to break, getting above resistance, going sideways, and then breaking higher? That makes no sense at all, but that's what's happening. And, you look to see, can we get a follow through tomorrow? I just want to really impress upon everybody that one day of breaking out, those of you that have been longtime viewers, you've heard me say this numerous times, but for those of you that are new, viewing us on, and by the way, on the shorts that we're doing, etc., thanks for all your comments there. We're getting some pretty good views out of that starting. And if you are a follower of TikTok or LinkedIn, please follow us on those shorts. We just need a few more people on LinkedIn, and we can live stream on LinkedIn as well. But anyway, if you've been watching for a while, you know the drill here. We need to see if we get a follow through or confirmation day. And look where we could go here. The EWU could go all the way back up to 31. So there are setups here for potential runs into the end of the year. I think all that could change tomorrow, and we could be looking at, okay, we're headed lower, we're going to create the wave 5, etc. by the time we talk next week, we're going to have a lot clearer picture. Do we get any follow throughs on any of these? And then the EWJ, where I believe a lot of money is coming into our bond market from there, because their bond market is a mess. And look, it's moving to the upside as well. So this is one of the reasons that we do look at fundamentals at Elliott Wave Options. We like to have fundamentals as a support system, but you can't fundamentally justify any of the things that I've just shown you. I could sit here and argue why the fundamentals would be suggesting that we're going the other way for the entire hour, but that doesn't matter. And that doesn't make anybody any money. We have to look and see what the charts are doing and trade according to that and be ready to move, even if it doesn't make any sense to you. Now, looking at the EWJ, now on the high, we hit the 50-day moving average, which is right at that resistance level of 51. But look at this. If the EWJ can get above 51, see how vertical this move was to the downside? You're going to have a significant rally here. So the EWJ could be a great trade all the way up to 57 if it can get above 51 with follow through. Now it's at resistance. It's at the 50-day moving average. It hit it on the high. It could just as easily turn over and head back lower and move to the downside. It is in a wave 3 to the downside, but this could be the wave 4 bounce at some point in time. The wave 4 will occur at some point, but either scenario is possible there. So I'm just trying to give you targets to look at, and so that you can make your decisions on what you want to do based on how the market reacts to these targets. So that's the international markets. That's our market. We looked at our insiders meeting. We looked at Caterpillar, and so I wanted to show you that. Caterpillar was overbought. The insiders meeting is one that we do. Zach mentioned it in the intro every Thursday night, where we have an extended Q&A. That's for our alert subscribers. And we looked at Caterpillar, and Caterpillar's overbought. So if we take a look here, I want to show you that we did send out an alert, and this is what our alerts look like for our alert subscribers at EWOtrader.com. So what we do at TradeFinder here is we look for case study considerations, but our alert service is where we send out alerts for entries, any adjustments, and exits. So we hold you by the hand from start to finish on a potential trade when we send out these alerts. So if you've ever wanted a service along those lines, I invite you to take a look. Go kick the tires. Look at we're very transparent. You can see all this information goes on every single alert, and you can see right now it's down 12% because Caterpillar went up today, but it didn't go up a lot. But it's in the speculative portfolio. Why is it in the speculative portfolio? Because it's not an Elliott wave impulse pattern. It's an overbought scenario. So if it doesn't follow along the rules of our impulse portfolio, which is our directionally based portfolio, primarily from Elliott wave impulse patterns, we have a volatility portfolio, which is triangles. So we look for triangles and breakouts. And then we have our AI time strategy that is true AI based. And that helps us to find stocks that are sideways. So whether or not the market's moving up, down, or sideways, or even consolidating, we have all those covered with our different portfolios. So Caterpillar got overbought. You can see it was down a little bit yesterday, but back up today. But look at that doji. So when we look at the 10-day moving average, when you see a stock that's overbought like this, so this is why it's in the speculative portfolio, which is our fourth portfolio. And that's, if you want to follow along with those, understanding it's not based on an Elliott wave impulse pattern, etc. It's simply based on the fact that it's way overbought from the 10-day moving average, and it went vertical. And you know the way I view things, when things go vertically up, they often come vertically back down. And Caterpillar will come vertically back down. Now, could it go higher first? Yep. Could it go sideways first? Yep. Could it be next year when it comes vertically back down? We saw that with the INDA. Where it took a long time before the vertical move back to the downside came. So we're not going to hang around forever and let this wait forever. If it breaks above 220, then we'll close that position out. We'll get out of it, because the idea is that's resistance. It's bumping its head against that, and at some point it's likely to come back down. And on top of everything else, we got a gap that needs to be filled. So even though it's down 12% right now, it still looks good. I still like it. We've got a doji. So something's going to happen tomorrow to Caterpillar. Either it's going to fall back down significantly and we're going to get the trade we were looking for, or it's going to break above 220. Even though it's overbought, we'll probably just go ahead and get out of it. Stocks can stay overbought or oversold for periods of time, but not long periods of time. So I'd be surprised if it goes vertically higher from here. But again, we don't trade based on what it thinks going to happen. We trade based on the rules. And so we'll see that doji right there at resistance, away from the 10-day moving average with a gap. It looks like a great setup. So from a risk to reward standpoint, it made sense. But do all things that make sense work out? Nope. That's why it's trading, and that's why trading is difficult. You know, you have wins, you have losses, and if you're not willing to take losses, then trading's not for you, because they will exist and you will have them. And so just when the pattern changes or doesn't do what you think it's going to, or what the technicals tell you, then you get out. That's how it works. I did want to show you this Global Life. We did have an alert on that, and it's held in there pretty well. So we got out before this big move to the downside, and it looked like we're heroes, right? Because we got this gain to the upside here, and then it pulled back, but not quite ready to say we're going to start the wave 4 yet. Remember, these are projections. People get confused by this when it shows it on here by thinking we're in the wave 4. No, the colored circle, that's the wave you're in. So when you have a purple color here, and you can change the colors on your own chart. This is Profit Source, by the way, which I think is the best Elliott wave software that exists out there. When the waves are confirmed, then it turns purple. When it's the current wave, then it's the light green. So this is the current wave. What this is saying is if the wave 4 were to start today, that's where you can expect it to find a bit of support, if it were to start. But clearly, it's not quite sure that the wave 3 is over yet, but we're out. We took our gain, and we had a nice gain. And again, you know, a couple days ago, it looked like, man, we nailed that one. Maybe we still did, but it could go higher from here. And then you could look back and say, it would have been great to wait, but you can't Monday morning quarterback. If you have a gain and you're happy with the gain, when you take it, just be happy with it and move on. But what I'm trying to do is share things with you of, okay, you know, we took the gain and we were happy with it. Could we have made more? Maybe. We'll find out in the next couple of days, but you don't second guess yourself. So and we don't want to do that either. But I wanted to show you this one because we had looked at this and sent it out as an alert. So I've already talked about Amazon. So at this point in time, let's see if we can find a case study consideration for tonight, and then we'll go ahead and open it up to some questions. And well, we got 5 here in the impulse side of things. DR Horton. Now, tell me how in the world you could expect to see that. I got to look at that. You know, the ADP makes a lot of sense to me. That one makes sense because of how tight the labor market is, payroll processing, et cetera, but among many other things. But you look at DR Horton, and it's not in a 5-wave impulse pattern. The DMI hasn't triggered yet. All right, that does make a bit more sense. It sure looks like it's going to, but again, those that have been subscribers with us or have watched with us for a while know that the DMI, and on our website we have education, all things Elliott wave, and then on our confirming indicators, because our technical trading system is based on Elliott wave with a set of confirming indicators to enhance what Elliott wave says and support it. And with the DMI, the rules are you want that ADX moving up. You want this good separation between the 2 directional indicators, which we have. You want the ADX breaking above the lower directional indicator. In this case, it's the negative directional indicator. So you would expect to see the chart moving to the upside, which it is. But the trigger is when the ADX gets above 20. It's not there yet. And so the temptation is you look at that and you're thinking, it's going to get there. Look at that separation. It's going to break above 20. I want to get in now. I don't want to wait, because it looks like we're about to try to break through some recent resistance here. And if we break above that resistance, we're off to the races and we're going to miss the big part of the move sitting here waiting on the ADX. But again, our long-term subscribers have seen this numerous times where we've pointed this out, where the chart looks like this and the ADX comes up and it just rolls over and it never triggers, and you jump the gun and you end up with a losing trade. So maybe what I described happens. Maybe we break above this resistance area and it takes off and we miss some of the move before the ADX breaks above 20. But I submit to you that there's still plenty to go. if this is a well set up DMI and the ADX breaks above 20, there's great separation between the two directional indicators, and all things follow along the rules, then it's telling you that trend has strength to it and it's likely to continue. So there's plenty more move to go if that were to occur. So you wait. So we couldn't do anything with this now. This just goes on the watch list and you keep an eye on it. But this is not something that we would do at this point in time. And so wouldn't be surprised to see that one roll over, but maybe it does. I am really interested to see what this ADP chart looks like, because that's something that I think we could, see, look at that. So this makes sense. We got a tight labor market, even though the Federal Reserve is trying to attack the labor market. When you see this, it's not in a 5-wave pattern. Is that a, see, now there, that could be a big zigzag. Look what happened here. So this is actually a really good chart to look at. So here is a triangle. So we had a symmetrical triangle. We broke out, we came back and we retraced the breakout. How many times have we talked about that in these events? When you have a breakout of a triangle, it gets retraced. It's just like filling a gap. It's going to happen, but you don't know exactly when. Sometimes right away, sometimes takes some time. But now it's moving back to the upside here. What I wanted to see in addition to that is, do we have a zigzag here as well? And maybe, yeah, we do. So that looks pretty good. As a potential target up to 283. And there's the different DMI. See, now the ADX has broken above 20. You're starting to get the separation here. So this could be an early entry here. So that's going to be our case study consideration for tonight. And that's going to be, so 11.1 is ADP to the upside. All right, so last week, the case study consideration that we looked at was this AGCO. That's the only one that we had from last week. And you can see the setup here. And here's the earnings report. Now watch what happens. So, Doji, nice move higher, another nice move higher, another nice move higher. So you've had a really good move. So we've gone from, and this is a question that comes up all the time, at 118, and we did think it was going to go higher, but with the earnings report on the horizon, so you're at 118 and you go up to 125, that's a 7-point move. Now, do you want to risk that profit going into an earnings report? That's not a smart thing to do when you have this move to the upside moving into an earnings report. You're in a nice wave 3, but with the earnings, especially this quarter where there's no rhyme or reason to how the market is reacting to it, you've got a 7-point move from what we looked at last week. That would have been a point. We did not send this out as an alert to our subscribers, or if we did, we likely would have taken that gain, but we didn't do it. So again, full disclosure there. We looked at it last week, but we did not send it out as an alert. But if you've got a 7-point gain in the stock, and I mean, we look for a 10% move, and that's 7%, just under 7% move there. You want to take that off, and here's why. Look what happened. Boom. There's the result on earnings. Now it could still find itself and turn and go back to the upside, but why would you not take 7 points when you're moving into an earnings report, especially when it started to go vertical? So we had a 45-degree move here, and then we went vertical. So hopefully anybody that followed that went ahead and took it off. We would have certainly done that had we had this one as alert. We didn't, but that's why when you have a nice gain going into an earnings report, you want to go ahead and take that gain and not risk it with the earnings. Now, there are times when we do hold positions through earnings. Every scenario is different. Every situation is different. And this is not one of those. And look what happened to the Elliott wave pattern. That was such a correction on the earnings that the 5-wave impulse pattern completely relabeled. It's gone. Now it's in a corrective phase. And so if you were following it and you were still in it, now you're back to break even. You're right back where we started, and you just want to take this off and move on and go into something else. So I thought that was worth sharing with you as well. All right, with that, Zach, go ahead and open it up for questions.
All righty, very well. Thanks for that presentation, Rob. Tons of questions and comments as always. I guess we'll start out with a couple requests for good old Tesla.
I figured, not a surprise. Elon, everything he's talking about is Twitter now, and it makes you wonder if the Tesla people are going to get angry, but I don't think so. So in the last update that we did on the weekend, I said, what do you think is going to happen with Tesla? It looked like it was going to go back to 240. That was my commentary. Go look at the video. It's there. Now, once it gets there, what's going to happen? And so that was what I liked it. I like the interaction. And people say, well, you know, if you're a full-time trader, why are you doing this? Why do you do these videos and stuff? What else do I have to do? I can't play golf with broken ribs and a broken ankle. So I like talking the markets. I enjoy it. I'm one of the weird people that, you know, the weekends are boring because the market's not open. So we talked about this, and I like interacting with people. I like to hear your commentary. I like to hear what people are thinking. It's just, that's enjoyment to me. And so that was the comment. We're likely to hit 240. Then what happens? What do you think is going to happen from here? Well, now we're here. So I'll ask you guys too. Do you think Tesla can break above 240? I know you're all looking at this gap right here, as am I. Can we break above that and go hit that gap? You can see we are in a 5-wave pattern to the downside, but clearly right now we're in the process of the wave 4 bounce. It hasn't labeled yet, but it sure looks that way. Can it get all the way up there and close that gap? I think it could, and label a wave 4 probably right around the 61.8% fib level, but it could also turn and head back down, because not only is 240 support resistance, it's also exactly where that triangle was. So that's a major point of support resistance there at 240. So we get there, what happens? Well, I know you're looking for me to give some sort of guidance here, but I don't know. You know, it's an important level here. If we turn and head back lower, we probably label the 4 right there, and we're in the wave 5 lower. If it bounces up, then I think the wave 4 probably will label up here where the gap gets filled. But it's got to get above 240 first, and that's going to be a big deal. You can see it closed, but everything closed on the low today, right? Because the market traded from 9:30 to 11 and did nothing the rest of the day. So anyway, we'll see. 240 is the key. We're there. Those are the two scenarios that can occur there. And there's just no way to know which one. Tomorrow's probably going to tell us a lot. I am impressed that Tesla did hold that 200 level that we talked about, and it did make it back to 240. So it's done everything we talked about it. But now I don't know. Now's the point where I don't know what happens. We'll just have to see. Sorry I didn't give you more insight onto that one, but just don't know.
No worries. I'm thinking that might be a good concept for a future t-shirt, possibly, is tomorrow will be interesting, or tomorrow we'll find out tomorrow, something along those lines.
Are you picking on me, Zach? Is that
no, not at all.
Fascinating.
Just an idea.
Another phrase. We have t-shirts. If you're wondering what he's bringing up, we have t-shirts with the phrases that I say all the time, like fascinating, gaps get filled, 10-day moving average. The support people get a kick out of the fact that I tend to say the same phrases a lot. Anyway, stop teasing me and let's go to
all in good fun. No, the next one we'll go up here with is another big one. There's been a few requests on Amazon.
Well, we looked at that one already.
Question though with Ray is, what would the market need to do to arrive at whether Amazon has stopped selling? And a few have said if you wouldn't mind going back over it real quickly. Or I could say watch again in the beginning.
Okay. Well, the best you can hope for, and you know, when I mentioned this before, I'm putting out there that Amazon may be ahead of the market. It was one of the few that was, in my opinion, honest. You know, they were honest with they seeing consumer spending lessen. They were honest that they think it's not going to be a great holiday season, and so the market crushed them. But I think they're getting ahead of things, getting ahead of what's likely to happen. And so when that occurs and the selling is first, it's the first one to turn and go back to the upside. It'll be like the Qs will lead things when the Fed cuts rates. I think Amazon is going to be the one that leads us out of this because they were honest and their stock has been hurt. So what I drew was this triangle here, and it could be very similar to what we just looked at with Tesla, where it goes back up, to the point of that, fills that gap. It's going to fill that gap. And we see what happens from there. It's way oversold right now. If you were looking for, this is the inverse of Caterpillar, right? So if we don't have just a bloodbath of a day tomorrow in the markets to where everything goes down, I think you could look for, it's coming off a 78.6% fib level. It's right smack in the middle of the wave 5 tap box. You got a gap to fill. It can fill that gap before it gets to resistance. There's a lot to like about a tradable move in Amazon. So I like that. So what has to happen? Not an ugly day in the market tomorrow. So if the Fed is not pounding the table on their hawkishness and the market just reverses and heads down in an ugly day, that would be what could snafu the scenario. Barring that, I think Amazon is a good place to look. Again, I respect the management for taking the hit and being honest about what the next quarter is going to look like. Other companies haven't done that.
Absolutely. Yeah. And thanks for adding further context to that and going back over that one. We'll shift focus here and go back.
Well, thanks for bringing it up, because normally I would have said, well, we're going to look at it, let's look at something else. But that was fair. And I was like, a sidebar or furthering the point. So.
Yeah, there's been some interesting chatter on all the different platforms, so I just thought it'd be a good one to bring back up. So we'll shift focus and go into a different market here and look at crypto, if you wouldn't mind bringing up Ethereum.
Are the subscribers asking for this, or are you?
Well, it was from a subscriber, but I'm not upset that the question was asked.
Yeah, because I know you're a holder of Ethereum too. So but I mean, there's your blast off, right? Here's what I was talking about with Bitcoin. That's the launch pad, and then that's what happens. That's why we talk about this, and our subscribers are used to it. That's the launch pad effect, when it goes dead sideways and then you get a blast off. It's a hair vertical, which is a little concerning, and it's right at resistance. So this move here, it just fulfilled the launch pad blast off effect perfectly, but now we're at some resistance. So 1600 is going to be a key. Can it get tried today? And then it came back down. So it's a bit overbought still. So the most bullish scenario for Ethereum is it sits here for a couple days. Let that 10-day moving average catch up. Don't try to break 1600 now. If it does, it's not going to hold, because if it breaks above this resistance area, when it's overbought, it won't hold. It'll come back down. So it's got a quasi doji there, but stay sideways here. Hang around under 1600. Let the 10-day moving average catch up, and then, if Ethereum can move from here, it might have a little bit, but not a lot, a little resistance here at 1900, but it could be really off to the races if that were to occur. But it's got to do it first, but the potential is there. This is something that's definitely worth keeping an eye on. Again, just to reiterate, I repeat myself a lot, I know, but I do that because sometimes I talk fast and people aren't able to comprehend everything as fast as I talk. But go sideways under 1600, consolidate, let the 10-day moving average catch up, then break above it with a follow-through day, and you want to be in Ethereum. If that scenario plays out, that's a good place to make some money.
Absolutely. All right. So next up, we will go to a question here from Gilbert on YouTube. Can you please review MMAT?
Pretty nice move there. I like that doji there today. But you had a lot of consolidation down here just at 75 cents. It tried to break below it, so it consolidated some more. There you go. I mean, you guys are just giving me stocks that are illustrating we haven't talked about the launch pad and blast off effect for a while, but there's two in a row. You can see boom sideways there, and there's the blast off. So launch pad right there. There's the blast off. The doji is concerning. The $1.25 is resistance, though. It's just a touch overbought, but not that significantly overbought. Where the rubber's going to hit the road here is $1.25. I think this likely sees that. I think you likely get to $1.25, and then we'll see what happens. If it can break above that, then you're going to $2. Because look at, I mean, that's an easy one. So what you want to watch is $1.25. If it can get above $1.25, it's going to go to $2 because there's nothing in the way. That's where your next resistance is. It was an extremely vertical move down from $2, but it's got to get above 125 first. So I think you move to 125, then you pause, watch it. If it gets above there, I think you got a nice run to $2, but it's got to get above $1.25 first.
Very well. It's one I'm not super familiar with, so that was interesting to hear your analysis on that one.
Yeah,
so,
that's kind of going back to like the height of the meme stock days. There were people that were looking at that one.
Right, exactly. So this next one is something that we would cover in Insiders more often than not, but there's a question here from Brian on any thoughts on the China market for FXI.
I do have thoughts on that, and I don't know if Pankaj is on this. He usually is. He's one of our subscribers, so we usually hear from him on Thursday nights. But the way the China market has been beat down, he's always asking for stuff to do leaps on. And so my thoughts on the China market is, if you're of the mindset of something that you want to buy long term, knowing that there could still be more pain, but how much more pain? Look at this move lower here. The FXI is down to 21. If you're looking for something to park some money in and you don't need it for a year or so, and you're willing to let it ride through a few up and downs in the meantime, I'm glad you brought that up because I think I was going to forget, but I really did want to bring that up tonight. Is if you're looking for something long term like leaps, a year more out, then I think the China market is where you want to be. A year from now, it's going to be totally different. Did you see they shut down Disney World in Shanghai? If you were in Disney World, you couldn't leave because there was one person went to the Disneyland in Shanghai and had COVID. And so they shut the entire park down, wouldn't let anybody leave. And so then they brought people in and everybody has to get tested. And until you had a negative test, you were not allowed to leave. That's amazing. But they are not playing around with their zero COVID policy. And it's been crushing the stocks, along with the surprise of President Xi going for a third term because he's been negative on the China tech stocks. But I don't know where anything in China goes for the next few weeks, maybe even a couple months. But I feel like if you were to step in and do something really long term now on China, like buy leap calls, and just forget about them for 6 months and then take a look at them, I think you might be pleasantly surprised, because at some point this is going to turn around. They're going to come out of this. They're going to get away from that policy. Perhaps whatever damage President Xi can do has been done. And there's going to be a nice rally out of the China stocks at some point, but I have no idea when that's going to be. But I would expect it to occur within a year. So if you wanted to go out a year or two on some leaps there, I think just pick your favorite China stock. They're all in the same boat. They're really hard to do anything short term with right now, but long term, they're so beaten down. It's the blood in the streets thing, right? This is Warren Buffett stuff. This is when you start looking long term, and I think that's what you want to do there. If you have any capital that that's long term stuff and you put away, that's where you want to be. All right, let's do a couple more because I spent a long time talking on that. But thanks for bringing that one up. I wanted to talk about that.
Yeah, no, I wanted to hear your thoughts as well, and I wanted to hear them tonight and not have to wait till Thursday. So thanks for going over that. Our friend Silver would like to look at USO.
Okay. We have a triangle right now on oil because it's just so well set up with this big symmetrical triangle right here at the major point of support resistance at 70. It's trying to break to the upside, but it hasn't yet. And so you could take a look at where we put it on, and I'll redraw these lines because this is where we put the strangle on right here, which was, the point of the triangle was right at 70. So you could say this broke out and has come back to test the breakout. Look at all these dojis. Nobody knows what's kind of, there's so much indecision around oil right now. 3 dojis in a row. You don't see that very often. So that tells you how much indecision there. I know there's a lot of speculation that oil is going to skyrocket. There's speculation, I've brought it up, that if we do go into a significant recession and the demand falls off, you could make a case for oil going down. There's pretty good arguments to be made both sides. So what do you do in that? You put a strangle on and you just sit and watch and say, I don't care which way it goes. It's trying to break to the upside. It broke out, it's tested it, but it's not enough to count it. It would have to get above here before I would say, yeah, that's an upside breakout. It's trying now, but it's still in massive indecision mode with those 3 dojis in a row. But you break above 76 or so, then I think you're off to the races to the upside. But that's the level it's got to get above before you can say it's meaningful to the upside. One more.
Agreed. One more. All right. Well, I was going to say, if I could bother you for it, if you wanted to bring up, while you have USO, bring up UNG. And then one more quick comment for you.
Okay. So UNG, we've talked about this, that we're leaving the normally bullish time of the year for natural gas, because remember, the market always looks 6 to 9 months ahead, which is confusing to people at times, but it's already looking for coming out of winter. So the rally to the upside was the move into winter, and this is a seasonal trend that occurs often with UNG. So now we're in the time where we head back to the downside. But when you can see right here, we're at a point of potential support in this wave 3, and it's gone sideways there because it's the June-July lows. We could bounce up into the wave 4 now. So you could get a bounce up towards 25. It could also fall all the way down and go to 14. But I think the path of least resistance would be a bounce higher here with all of this selling, but it wouldn't surprise me to see it go lower either. So in this wave 3, if it's going to bounce into the wave 4, it's going to do it now. Otherwise, we come all the way down here, and then that labels as the 3, and then your wave 4 bounce occurs after that. So if it's going to do it now, it's going to do it now. Otherwise, you see the wave 3 come down here and then the wave 4 bounce. So keep a close eye on where it's trading right now, right here at what is that, 18, 19. That's the key area right now.
All right. Thanks, Rob. And so for this last one from Gary, Rob, you called AZO perfect. You said if it closed at 23.20, watch out. I'm underwater on my calls. I was wondering what you think about its next move. How much higher can it go, or will it go lower? Thanks.
ACO?
AZO.
AZO. AutoZone. Okay. Well, it's consolidating this big vertical move here, and that's what happens. If you've got calls, then the thing that you would want to hang your hat on is the fact that it didn't, because it could have come straight back down. So it went up vertically, it's gone sideways. They're taking all the volatility out of the calls. That's what's hurting you now. And so even if it comes down now, you're not going down nearly as far to get to the 10-day moving average. So there could be a little bit more pain, but it's actually a bullish sign that it's going sideways right now and allowing the 10-day moving. I know that doesn't help you on the fact that the calls are underwater, but the fact that it didn't turn and come straight back down, I view as a bullish thing. It's probably going to go sideways to lower for a little bit longer and let that 10-day moving average catch up. But once it does, then it could take off again. So I would keep an eye on it for a couple days. And then depending on where your calls are, once the 10-day moving average gets there, and if it looks like it wants to go higher, then perhaps you could even add to them. But yeah, that's what's happened. They took the volatility out. You got a little time decay. I don't think the consolidation is quite done yet. But it is is definitely a positive sign that it didn't reverse and come back down. When you get overbought or oversold, one of two things is going to happen. It's either going to reverse and go back to the 10-day moving average, or it's going to go sideways and let the 10-day moving average catch. And in that case, in this instance, that's what's happened. So thanks, everybody. Appreciate it. As always, time's the most valuable asset we all have. Thank you so much for devoting some of your valuable time to us. And we do our very best to make it an informative and educational use of your time. I hope you felt that way tonight. Have a great week. Look forward to talking again soon. Take care, everybody.